Our market monitor tonight says stocks will rise by as much as 10% in the new year, but it'll be a rocky road. He's Sarat Sethi, Managing Director at Douglas C. Lane. Sarat, nice to have you with us. So you're talking about the S&P 500 gaining 200 points in the new year. What's going to drive that?
So I think you've got a few positive factors. One that we've seen in the last month is oil coming down to the 50s. Our view is that oil is probably going to stay in the 60 to 80 range. That is one of the biggest tax cuts that consumers can see, considering that 2/3 of GDP is consumer driven. That, along with better economic news in terms of employment and earnings, will move the market ahead.
Mr. Sethi, you have 3 picks that you want to tell us about, all of them basically in the technology space. I would call them really blue chip tech stocks, starting with Qualcomm. Why do you like it, and what's your price target?
So Qualcomm is our value technology stock. It's an out-of-favor telecom stock. We like it for multiple reasons. One is that it controls the 3G licensing all over the world. Today, you've got an issue in China where China is contesting the licensing. We think that's a short-term blip. Once that's resolved, we'll see the stock move probably from where the low 70s it is today to about 85 to 90, where we think it should be.
You also have Stratasys on your list, and this is a company that at the beginning of this year was trading at $130. Now it's around $80. Where do you see it going, and why should investors put new money in this company?
So Stratasys is definitely our growth pick. It's definitely volatile. It's in the 3D additive printing space. There's a lot of competition coming into this area, but we think Stratasys is the leader. They've definitely by far growing over 20% top line and earnings growth that we see in the high teens to 20% for the next 3 years. Given what you've seen around this industry, we want to be with the leader. We want to be with a company that's investing in growing its business, not just using financial engineering.
And speaking of leaders, your third choice is Google. What's your price target on it, and why do you like it?
So Google for us is, we think this stock should be at least $650 to $700. We like it. It's a 3-prong approach for Google, really. They're the leader in search. That we think is going to grow, especially as mobile keeps on growing. Secondly, they're big in Android, which we think is growing even faster. Android is being used not just in mobile, but it's being used today. You saw the announcement in cars. It's really the software that's driving a lot of the growth. And then thirdly, YouTube. YouTube is something that when they bought for very cheap is now growing very fast and completely, we think, undervalued within Google.
Real quickly, we have about 30 seconds left. These stocks that you're talking about, you say that the markets will go up, but it'll be a bumpy ride. If investors buy these now, should they just stick it out, hold it all the way through the year, or is there a point at which they should sell and just take profits?
So we would like to own these. These are companies I think for the next 3 to 5 years you should own, and definitely good entry points today. You might get an opportunity, especially when we've seen the market volatility in the last 3 months, to buy some more. But I would at least initiate a position in these today, and I think 3 to 5 years from now, we think you'll be pretty comfortable with what the price targets will be at that point.
You know, Sarat, we don't usually get people thinking that far out, so thank you so much for your forecast. Have a great weekend. Thank you so much. Sarat Sethi with Douglas C. Lane.